Wow, what a day in the stock market today. You had the S&P 500 reverse 140 points off of the highs of the day to finish 53 points lower. And that's the second time this week where we've seen momentum quickly get sold. On Monday, you had a nice gap higher, it finished higher, a little bit weak into the close. Tuesday, huge sell-off. And then today you had a nice bounce higher into the open, and it actually looked like it could be one with some legs to it. You had really good breadth. That wasn't there on Monday. You had 5 stocks going up for every 1 stock going down. You also had the volatility index completely collapsing as well. And you had the Russell 2000 index leading the entire market higher, which was not there on Monday. So everything was going well for it. But with Jerome Powell still talking about tapering at a faster pace than what everyone was anticipating, and maybe he was just waiting until he got the renomination to get that tapering going at a much faster pace. But he is very serious now about the inflation prospects facing this market. So let's go ahead and get to the charts. What I want to do with this video today is go over the S&P 500, the Russell 2000, the Nasdaq 100, and a number of other different indicators that I'm following right now. But first, make sure to go click join below. Make sure you're also subscribed and getting the notifications from this channel for when I'm doing my live streams and when I'm posting these videos multiple times each week. With the membership down below, when you click join, you're going to get all my market research each and every day. That's going to include daily watch lists, my master watch list that I update each week, the most intriguing charts of the day that I come across, and updates on all the FANG stocks, plus Microsoft and Tesla. Also, you're going to get updates on the S&P 500, Nasdaq 100, and Russell 2000. So click that down below and support this channel. Now, to the charts. S&P 500. One of the things that sticks out to me most here before we start drawing some lines on this chart is the fact that it broke below the 50-day moving average. And why that's important, and I talked about this in my live stream earlier this week, was that the 50-day moving average has been a source of opportunity for the bulls to buy the dip at. That hasn't happened. I mean, look at just of late here. You have a dip buy here going all the way back to May of this year. And then you had it again here in June, again in July. The only time where we weren't able to buy the dip off the 50-day moving average was right here in September and October. And that was probably one of the more significant sell-offs that we've even seen so far this year. So we dipped below it, but within a few weeks, we're trading right back above it, pushing our way back to all-time highs with almost no days to the downside. It was an incredible run in October and for most of November. But I've talked about this many times. The stock market will take the stairs up and it'll take the elevator down. And right now we're seeing the elevator not even stop at any floor. It's just picking up momentum and going lower and lower. And the dip buyers, they have become so accustomed to buying every dip and every opportunity, including chasing the market higher today and chasing it on Friday, that all they were given was a big pile of crap in return. And so there's a lot of trapped traders now, which can lead to more panic selling going forward if the market continues its sell-off, even just by a little bit. Those retail traders that are trapped long up in these areas here, they're going to start panicking and start selling their positions with market orders and send the market even lower. Now, I also talked about too that I was curious if we're going to be able to hold price level support here on the SPY chart. I just switched over from SPY to S&P. I like to do my technical analysis on the SPY chart because it better reflects gaps on the chart itself. So big break below the 50-day moving average. We already talked about that, but look at this price level support. This goes back to the previous all-time highs, not the ones that was formed in November, but the ones that were formed in early October. I thought maybe there's some support there. I didn't think it was a strong level support, but there's really not a lot of support right now between here and the lows from September and October. So I wanted to see whether or not the bulls could step in. It would be in conjunction with the 50-day moving average. It would be in conjunction with this nice yellow price level support. But it didn't. It just sliced right through it. And as the day wore on, you had 9 straight red bars on the 30-minute chart that saw nothing but continued price acceleration, and the volume continued to increase. So when we go back to the daily, we need to ask ourselves now, what might be the next support level that the market might want to try to hold on to? And for that, I would take you to this trend line here. What's interesting about this trend line too is that you actually have a lot of trend lines that you can even go further back, and it converges all into the same point. I actually thought that was really, really interesting. But no matter the trend line, all these trend lines keep pointing back to a very strong multi-layered support level. Now, if this support level it doesn't hold, and it's around 445, but it's also going up each and every day, so that support level does go up each and every day. If it can come down to this 444, 445 level, that's where there could be a lot of support kick in. But if that doesn't happen, then you have a serious do or die moment for the market. And that's going to be where it comes all the way back down to these September, October lows. And it needs to hold it at that point. If it doesn't, you're putting in a significantly new lower low. This would be the previous low. You break that, that's your lower low. That means a new trend reversal has taken place to the downside. Let's look at the Qs. Holding up pretty good relative to the other indices, but head and shoulders pattern here confirmed today. So tomorrow's going to be also a do or die moment for the Qs, because if it can't bounce and reclaim this neckline that it just broke, there's a good chance that it's going to retest this rising trend line going all the way back to last year's November lows. So this head and shoulders pattern, very critical, very important that it gets reclaimed tomorrow. And we've seen that happen a number of times in the past where the head and shoulders pattern will confirm, or it'll just barely slip below it. And then the next day you see this huge surge of buying, breaks through the right shoulder, which would be right above here, and then takes out the previous all-time highs. So that's what I'm looking for going forward. If tomorrow the market rallies, the Nasdaq 100 rallies, and can hold this neckline, you have a good shot at this market finally putting in a short-term bottom. Also, notice the volume from the last 2 days. This is significant volume that's flowing in. You saw some significant volume on Friday, which was a half day of trading on the day after Thanksgiving. Very strong there. Almost every one of these days has seen significant selling, and the market breadth has been really bad as well. Today it was over 2-to-1 in favor of declining stocks over advancing stocks, but you have to remember, it started the day out 5-to-1, 6-to-1 in favor of advancing stocks over declining stocks. So that was a huge reversal in the favor of the bears. IWM has been the one that's taken the biggest beating out of all of this, and I've been highlighting this channel all year long. It broke out of it in late October, and this is why you use stop losses. I actually played this breakout, made about 3 or 4% off of this move, got stopped out of it, but look what it's done ever since. If you're not trading with discipline, you're going to be subject to a lot of bad moves that go against you. It may not always happen, but when they do happen, these bad moves that just go south on you really quick, like what you've seen in PayPal of late, or what you've seen in Baba, it will take out years of good, profitable trading. So we have to make sure that we're using stop losses. Now, check out what it's doing, though, this IWM. It's testing this major support level. Is it going to hold it tomorrow? Another do or die moment for the market coming up tomorrow. It needs to hold the support level and bounce. That's the case for the bulls. If it doesn't, you've got a massive topping pattern that has been put in on IWM, and there's a good chance that you're going to start seeing a move back below 200 on IWM, and that may just be the beginning of it. So I'm not trying to do a lot of fear mongering here, but we're starting to hit some major technical levels here, or quickly approaching some major technical levels that you want to be aware of. And this isn't me trying to say, you need to sell all your stocks, the market's crashing. I'm not trying to do that. What I'm trying to get you to do is to be aware of your surroundings, be aware of what you have here on the charts, because so often we just want to look right at the stocks that we're trading and remain oblivious to everything else going around us. Right now, the conditions are worsening. They haven't got to really, really bad yet, but they're getting bad. And yes, the dip buyers could turn things around, but so far we're not seeing any evidence of that. If anything, they're trying and they're failing. And the more that they fail, the more panic that they will create for the markets, because eventually they will stop buying the dips. How about the VIX? Volatility index had one wicked candle today. Goes all the way down to this massive support level, which has been resistance for almost a couple of years now. But instead, it's actually using it as support now, and it's over 31. Anything over 20 is considered heightened volatility. We're at 31, some of the strongest readings that we've seen since January, February of this year. So that is very big. We're not seeing that immediate selling tendency that we have seen going all the way back to June of last year. Instead, we're setting ourselves up for maybe a much bigger move on the volatility index. And if that happens, I'm not saying we're going to get like this. However, we're staying elevated far longer than any time over the past 18 months, and that should be a reason for concern. So what's the takeaway of all this? First of all, you want to make sure that you know your support and resistance levels. This is a very difficult market, and a lot of people are going to blow up accounts. The one thing we've learned from over the last 18 months is that the market has rewarded a lot of reckless trading. A lot of people who don't manage the risk has been rewarded, because oftentimes those stocks will come back. But there will come a time where the stocks don't come back. And when that happens, it doesn't matter how much you've made in gains over the last couple of years, those gains will quickly vanish. So you want to make sure that you're not getting sloppy here, because this is not the time to be making epic gains. It's the time to be buttoning down the hatches, trying to preserve your capital for better trading days. Careful too that you're not trying to buy the dip every time the market sinks. I haven't bought a single stock this week. In fact, I haven't bought a stock in 2 weeks. Not because I don't want to, it's because I want to make sure that I'm not putting myself in a losing position just to take a loss because I have this need to trade. I don't have the need to trade, and I'm going to make sure that when I do trade, that the market's lining up with the direction that I'm wanting to take, and the sectors, industries, and the stock itself has a good setup to capitalize on. Until that happens, I'm not going to try to trade every up and down, because those are very, very difficult to profit on, and it almost makes you a day trader instead of a swing trader. If you enjoyed this video, make sure to like the video. Make sure to subscribe to the channel. Make sure to click join below and get all of my market research each and every day. I love doing these videos. You guys mean the world to me. Be careful out there. Don't take any unnecessary risks. Preserve your capital. Manage your trades. Make sure you know where you're getting out before you ever get in. And if you're not sure, just take a step back and watch price action unfold. It's benefited me quite a bit over the last couple of days. I hope you guys are able to do the same. Thank you guys, and God bless.